A brewing banking crisis fueled by weak governance structures, the fall of the stock market, and a crash in oil prices presented a tough challenge for Nigeria's monetary authorities. Only 3 years after a consolidation program designed to make banks stronger, banks had amassed trillions of naira in bad debts that fueled concerns around the health of the banks going forward. To convince depositors and investors that the banks were safe, the central bank had to explore the use of a special vehicle that will free the banks of the shackles of bad loans. That vehicle was the Asset Management Corporation of Nigeria.
The idea of setting up an asset management corporation for Nigeria goes back quite some years, but it was not actualized before the coming of Lamido Sanusi as the governor. And so now, faced with this crisis of 2008-2009, the time had come to move decisively on the establishment of an asset management corporation, or as it used to be called, or as it's called in several Western countries, a bad bank.
Nigeria's bad bank was set up and operational by November 2010 on the foundation of legislation which, while unique, borrowed elements from similar resolution vehicles across the world.
The Nigerian AMCON model is unique and is the first of its type in the world, but we have borrowed from what other people have done. So if you look at our law, you see elements of the Irish model, NAMA. You see elements of the Malaysian model, and also the experience of other countries that have tackled well the banking crisis in the past, especially Southeast Asia, where you have most of these bodies. AMCON is the first of its type in the world, where one body not only buys bad assets from banks, but also assists in restructuring those assets where possible, with the sort of longer term goal of ensuring that we keep our enterprises in business, we keep people in employment, we keep our capital market alive. And then, there's this other element of providing capital to banks to make sure that we have a sound financial system.
It's unusual for a bad bank to have as many mandates as AMCON does, but over the last 2 years, the institution has made major strides. CEO Mustapha Chikeobi speaks about AMCON's achievements thus far.
What AMCON has achieved so far is, as you know, there were several steps to what AMCON wanted to do. The first thing we wanted to do was to remove the non-performing loans from the banking system and any other loans that we felt posed a threat to the banking system. We've done that 100%. AMCON net purchase of loans going forward, if any, will be negative. In other words, we'll be recovering faster than any loans we may purchase down the road. So AMCON is now in what I call, in the NPL side, in a shrinking mode. We will not be bigger than we are today. People may apply from time to time to AMCON to purchase any loans, particularly if those loans get them above the 5% threshold that the regulator, CBN, is concerned about. We think that will be very rare because those are one-on-one transactions, and our intention is to make that a very painful experience for the banks. So anybody that comes to us with a non-performing loan today, our price will be a painful price, so that to discourage those approaches. And the process is one-on-one. We'll evaluate it. If we find a reason for it, we'll recommend to CBN that we purchase that loan, and then we'll get an approval from CBN. So it's not an easy process to sell loans to AMCON after this period. The second part was to recapitalize all the banks, and that has been concluded as well. There are a few outlying issues based on completion audits that have to be addressed. In some cases, some banks are overcapitalized. In some cases, some banks are undercapitalized to zero, and that will be addressed. But those are small, fine-tuning adjustments. We're the 100% owners of 3 banks, and we intend to sell them as soon as it's practicable. And practicable means that the processes are transparent and satisfactory to anybody who looks at it, that it was fair. Practicable means that the regulator, again, Central Bank of Nigeria, is satisfied with the caliber of people that are intending to purchase it. and that in purchasing it, that they will not affect the financial system. And so those are the things we're considering. But where the process is down the road, we've got advisors who will value the banks and tell us what the banks are worth and the best way forward. And after the advice is received, then we'll go to the next stage of what do we actually choose to do. As for the other banks, we own shares in most of the other banks in some form or the other. Our role, we believe in the viability of the banking sector. So we're not really in a hurry to sell a stake in these banks because we believe that the banking sector is underpriced, undervalued, and that in the next couple of years, AMCON will be in a position to recover much, if not all of its investment in these banks. The third thing, and always was going to be the longest stage, was the debt recovery, recovering on those non-performing loans. Recovering on those non-performing loans is proceeding at a faster rate than we expected. We had built in a model that suggested it would take us 3 years from the time of acquisition of a loan to recover it. We are doing better than that. So it's proceeding at pace, but it can go faster. We would love to recover all our loans immediately. But people must bear in mind that these are loans that were non-performing loans. Banks have been trying to recover them for years. And so these are not loans that are easy to recover. Otherwise, the banks will have recovered them.
Trillions of naira in the tough to recover and diverse loans were exchanged for bonds issued by AMCON and guaranteed by the Nigerian government.
The portfolio was, the numbers change all the time, but it was initially about 15% capital markets, about 20% in oil and gas, mostly downstream. There's about another 20% in what I call manufacturing, probably 10 to 15% in airlines, and then the rest will be real estate. It is changing all the time.
Nigeria's government has a contingent liability on the AMCON bonds. And so, a big test for AMCON going forward is the retirement of the debt instruments it issued in exchange for bad loans. A big part of the repayment is expected to come from loan recoveries which AMCON claim are happening better than projected. But the recoveries of the loans is just one of several controversies surrounding AMCON's affairs.
You owe, for instance, 100 billion. And then Asset Management Corporation will come to say, take up assets worth about 30, 35 billion. And then it will write off and clear the person as having liquidated the loan it owed to that finance institution, and that it has bought out the debt by the takeover of those assets. And now, those assets taken are not even 50% or 50% of the cost or of the value of the loan or the exposure of that person to that bank. Therefore, it is like auctioning the value and the depositors' monies in that bank by that process.
But AMCON says it has bought loans that banks were struggling to recover at a huge discount and will look to do deals to recover these loans that are in the best interest of AMCON.
Nobody gets preferential treatment at AMCON. Nobody. So we restructure our loans based on what's best for AMCON. That's our only criteria. So nobody has preferential treatment. We restructure on average 3 loans a day. Each of those restructure requires about 30 to 50 pages of documentation. And each of them, based on the amount, goes through several approval processes.
Another accusation from some watching the process to bail out the banks is that AMCON provides a soft landing and bailed out reckless banks that should be made to pay for their recklessness. On this point, AMCON CEO again disagrees.
The banks are paying for the resolution. The banks have agreed to contribute 30 basis points of their total assets for as long as it takes. In the real world, the banks are the majority shareholder of AMCON in the real world. So the notion that they're not paying for their mistakes is not correct.
There are differing opinions on the need and performance of AMCON going forward, but some say elements of the AMCON model are now seen in other interventions in the developed world.
And the evidence is that we've done far better than any country in these times. Indeed, what Spain is doing now is a copy of what we've done. The other thing is, the uniqueness of our operation is that this is not at cost, at least as of today, to the exchequer. The only cost to government thus far is 10 billion naira share capital of AMCON.
I believe that the decisiveness of the interventions of the central bank in the banking system and the reforms that followed cannot in any way be compared with what we have seen in other countries, especially in Europe. And the interesting thing about what they've done in Spain is that they've created this new bad bank, this asset management corporation of some sort, to purchase the non-performing loans, but also to help recapitalize Bankia, which is the major bank in Spain that is having huge problems. So that's something similar to the AMCON model.
Local and international observers agree that the worst for Nigeria's banking sector is over, even as many European countries still grapple with complex banking crises, and AMCON has played a critical role in that process.
I think one of the things that would have happened is that those banks, without a holistic addressing of their issue of bad loans, would have continued to limp on and on and on.
So the issue will have dragged.
Yes, with piecemeal measures not fully addressing the situation. That would have ultimately created a lot of instability for a much longer time in the system. That's one possibility. Another possibility is, of course, that some of those banks may ultimately have collapsed. That's another possibility.
Recovering bad loans, refinancing and retiring its own debt instruments, and selling its stake in 3 banks are among the top challenges facing AMCON going forward. It has already been applauded for the role it has played in saving the banks, but it must surmount some tough challenges that lie ahead if the cost of the resolution of the crisis is to remain minimal for the Nigerian government.